Thanks for standing by for us. As a reminder, this event's being recorded and it'll be archived on constructionbusinessowner.com. I'm Megan Beam. I'm the editor-in-chief of Construction Business Owner magazine and digital media. Welcome to Closing the Books Faster on Every Job, How Construction CFOs Are Modernizing Job Cost Reporting, sponsored by Intuit Enterprise Suite and VARC Solutions. Our presenters today are Brad White and Matt White. Brad White is a seasoned executive business leader with 26 plus years of experience in the QuickBooks and accounting industry, as both an experienced COO and operator and owner and CEO of VARC Solutions. At VARC Solutions, an Intuit and QuickBase partner, he's focused on strategic business growth, vision, and executive leadership. He's also a trusted consultant, specializing in QuickBooks and QuickBase. Matt Bright is a senior product specialist in Intuit's partner channel, bringing more than 24 years of Intuit experience and passion for helping small businesses succeed through better tools, service, and support. He specializes in Intuit Enterprise Suite, helping partners and customers understand how the platform can support more connected financial operations, reporting, and business growth. Matt brings deep product knowledge to conversations around construction workflows, including project tracking, change orders, job costing, purchase orders, and profitability visibility. At this time, it's our pleasure to begin this webinar. Stay tuned for after the presentation for the Q&A session. Please feel free to send your questions to the Q&A box throughout, and we'll get to as many of them as possible. So now I'll turn it over to Matt and Brad to get things started.
Awesome, thanks, Megan. This is such a fun opportunity to present to everybody today. And I don't know, Matt, how you feel, but it's like when it's like you've been doing this for 25, 26 years. I've been doing it the same. Like, I feel like I'm getting old. I don't know. Maybe it's just me.
Trying to keep pace with technology is always fun, you know?
Yeah, absolutely. Well, you know, we've both spent a lot of time in the accounting space, QuickBooks, Intuit Enterprise Suite. So hopefully we've got some good content to share with folks today, specifically around the construction industry, specialty trades, how to just do better at financial management around and especially within that construction industry. So just to get us kicked off, I want to go ahead and load our first poll, and let's see if that should be live now. Let's see. I'm going to see if that's showing up on your screen here. People can check me on my end or on your end if you see the poll. So the poll is, what is your biggest frustration as a construction CFO, controller, or financial leader? And again, just check me. Is everybody able to see that?
Yeah, I'm seeing it on my side, Brad. So
okay, perfect. So I'm going to give you about 30 seconds to a minute to answer that while I kind of just summarize the points for those that are maybe more in listen only mode. So finding out if projects are profitable really only after the fact. That can be a big frustration for a lot of financial leaders, of course. Managing endless change orders. You know, you do a good job of coming up with the project, and then it's just constantly change after that. That can be really frustrating to manage. Financial details getting lost from the project start to the project end. Managing cash flow, especially with significant upfront material orders and cash flow expenditures. I know, you know, as a financial leader, right, one of the things you've got to do is manage the money that's coming in and going out. So having that upfront expenditure can be big. Tracking field expenses back to accurate job costs, as also as delays in closing the books, especially for the controllers in the room, right? It's like being able to close the books predictably on time, knowing you've got everything in to do your job, let alone the folks out there doing the work in the fields and the crews and things like that. So hopefully everybody has had a chance to give their answers. We've got a pretty good portion of those being, looks like, completed. So I'm going to click on the next slide, which should show the results here. And I'm going to show that on screen so everybody can see that. And let me just do a real quick scan here. Matt, you can also, if you see that, you can kind of talk through some of those too.
Yeah, it's about 30%, 29.5% are finding that projects maybe had some challenges with profitability, but unfortunately after the fact. And that is something we very commonly hear. Multiple change orders, I think that's common to any job, about almost 12%, 11.5%. Almost 25% financial details getting lost from the project start to the end. So I know when I work construction, we need a box of nails or whatever the case may be to finish a project. And then, 3 weeks later, the receipt would show up and the project had already closed, and all sorts of things, hours not getting tracked. So that's a pretty common one. Almost 15% managing cash flow, all the different expenditures up front for materials, et cetera. So that's a big theme. And then the last two are kind of tied at 9.8, almost 10% each, which is tracking field expenses and delays in closing the books.
Yeah, so it seems like the big picture there, I mean, almost 50% total is just managing the financial details and worst case scenario, finding out whether the job is profitable too late, maybe even after the project is completed, or maybe 30 days after the project's been completed. So that makes total sense. You're, as a financial leader, you're trying to make sure that stuff is accurate and on budget. So makes a whole lot of sense. Let's go. I want to talk real quickly about sort of some of the changes that are some of the topics that we're going to be going through here. And so learning objectives. Okay. First off is, spotting where those job cost reports are breaking down, maybe where some of those financial details are getting lost. Okay. That's super, super important. In construction, change orders are just like, you wake up, you got a change order, right? It's an everyday occurrence. But knowing where that money is going and how that profit might be leaking out if you're not managing that stuff is super important. Being able to tie purchase orders, material orders back to not just your overall project, but maybe even individual phases within a job, super important. And then just big picture, real-time project profitability, not 30, 60 days later project profitability, but like as much as possible, real time. That requires obviously getting data in as quickly as possible, but making sure it's accurate, making sure it's attached to the right things. So great things that we're going to be covering. In terms of the agenda, Matt, we're going to cover 3 big topics. Okay. Change order management. I mean, again, it's an everyday problem. And the clients that we have that are in the construction specialty trades industries, this is where you make money or lose money. If you can have a project estimate and we think we're going to make money if everything goes right. But it's all the changes and making sure that we account for those correctly that ultimately can impact, did we break even? Did we make a little bit of money? Did we make a lot of money? I mean, margins are thin in construction as it is. So it's always a challenge. I mean, 1-2% can make a big difference overall. So we're going to talk about a little bit of change order management, get into project financials and phase management. That might apply, like specifically, Matt, the whole concept of phase management, that might not apply to everybody if you've got projects that are maybe 1 week in duration, but those longer term projects, it's nice to be able to break those things down into phases. And then finally, number 3, lacking that real-time project profitability. So we're going to touch on each one of those. I did a little bit of a scan before the webinar started just to kind of look at who's here in the audience. And we've got a mix of folks, right? We've got some folks that are obviously within a construction company. We've got some that are obviously within a GC type of firm. But we also have, accounting firms, CPA firms, things like that. So I think, Matt, as you and I kind of talk through this, I think it's really be helpful to make sure that we're kind of thinking not just as somebody in a construction business doing the finances, but also, hey, if I'm an accounting firm supporting that construction company, what are those things that I need to do to be able to predict as much as possible profitability, cash flow, things like that. So, all right, well, let's go ahead and jump into it. So let's go into our first topic. Matt, you want to just kind of kick us off?
Yeah, this one about change order management, I'm curious what you've seen. On the Intuit side, we talk with customers all day long of various sizes in terms of number of projects they're working at one time, in terms of total revenue. But even like you said, the mix of people we have on this webinar, along with the different types of construction, change orders, they can come fast and furious. If you're a general contractor, hey, you did such a great job on the kitchen, go ahead and do my bathroom. Hey, you did a great job on this lot of houses. I want you to be part of my next lot. But we got to do that all at the same time. So now all of a sudden, things happen dynamically, or, sometimes change orders can even go the opposite way. They're not expanding the job, they're contracting the job. But just a little curious, Brad, what have you seen in that space? Like, what challenges are you seeing in the construction space with different customers you talk to? And why are keeping up with these changes a little difficult with the current financial management systems and other systems they're using?
Yeah, it's interesting. I don't know if you ever heard that quote, and I'm probably going to get it wrong, but the whole, everybody makes their plans until they get punched in the face. Every boxer shows up with a plan until they get punched in the face, right? The same thing is true in the construction industry, right? You have a plan, you have a project, you've got things laid out as best as you possibly can. But as soon as you start that project, changes start happening, right? It's just a natural, normal part of the work. If you're doing foundation work that's below ground, right? You're hoping that the information you've got from the city on where things are laid out is correct and accurate. I had a buddy of mine that did basically demolition, rebuild, type of buildings, and got into a scenario where the city's documentation was off. The piping underneath the ground was 18 inches higher than it was supposed to have been, which who cares, right? It's just 18 inches. Well, no, it affects the foundation that we're about to pour, and then and how that butts up with the other property. So it's the things that you don't expect that oftentimes lead to the change orders. And then of course there's just personal preference, right? You're in the middle of a job and somebody says, we decided we wanted to make a change. On a personal level, I oftentimes will use the example of when my wife and I bought our first house, and it was under construction while it was getting we effectively bought it before it was finished, right? Which is great to have, because then you can make all these choices. But it was also terrible because we got to make all these choices, And so we're coming in going, well, gosh, that 6-foot fence is great, but what about an 8-foot? What about a board on board? Wouldn't that be great? So it's like me and my wife are making problems, hopefully also making money for the construction people, but not as good for our budget. But so those are just obviously some of the underlying aspects of just any construction job and project and company. Is there's going to be those changes, and they're happening all the time. So what have I seen in terms of clients, and what are they trying to do, and how are they trying to manage it? One of the biggest is just Excel, right? I'm trying to do everything in Excel. I'm trying to manage every single detail in Excel. And that's okay when you're starting, right? It's simple. It's manageable, but then now you've got, instead of one crew, you've got 5 crews. Instead of 3 trucks, you've got 10 trucks. Instead of, 10 projects in a year, now you're doing 100 projects in a year. As you scale, that type of Excel solution, if you will, starts breaking down. It's not as easy to manage the details. It's not a workflow system, right? And so you start looking for, like, what are those solutions that can help me automate this stuff, manage this stuff better? And invariably, one of the challenges, not just the technology side, it's the people side, right? Just because we have a system doesn't mean people are using the system. So like when we talk to clients, especially about technology and let's change from this to this, we always try to remind our clients that you can't forget about the people part, right? They need to be trained on how to use this stuff. They need to have buy-in to make sure that they're using this thing appropriately and that they agree on how it's supposed to work. So those are just some of the challenges that we see all the time. And, quite frankly, a lot of folks see the increased discipline and rigor that might be required as you scale. A lot of times they see that as more of red tape, bureaucracy, like, oh, now we have to do all these things that we didn't have to do before because it was in my head, tribal knowledge, but that doesn't scale so much. So now I've got to have better systems and procedures. So those are some of the things that I see. But I think a large part of, especially as you scale, it does ultimately, Matt, revolve around managing the projects and then managing the changes that happen during that process. So I think that would be, in fact, a great segue if you want to kind of show us a little bit about how that works and looks in Intuit Enterprise Suite for those that, especially for those of the in the audience that have never seen that.
Okay, yeah, would love to. And I see a lot of similar challenges as I talk with different customers. It's also not just about a change, but it's then how does that change impact the overall project financials, getting back to the CFO and the accounting folks who are supporting the project manager who's out in the field or whoever is there. And so pulling that all back together, that can be a little difficult. So, we'll show you a few things that we've done to help with this. So we're going to go into a little demo, a brief overview of projects, and we're going to talk a little bit about estimates, again, from a CFO perspective, from an accounting perspective, someone supporting getting the financials, getting the insights, and setting up the foundation. No pun intended, we're talking construction, but really in financial software, you have to set up the foundation just like you would for a house before you build upon it. And the better you make that foundation, obviously the better and longer everything's going to last. And so projects and estimates are so important because those are the basis of being prepared for all the puts and takes, the debits and credits to the actual project, which comes in the form of change orders. And then, how do we track those change orders, both positive and negative impacts? Is it expanding the project? Is it contracting the project? Did I make some miscuts and now I need to use more materials, so I need to assign more materials to the project? And maybe I don't even bill a customer, but it does affect my profitability. So those are the kind of things that we're talking about. So as we get into this first screen here, here's Intuit Enterprise Suite. And then you see that we have selected projects here, kind of down that left column. And you'll see we have a number of different projects in flight, which is totally fine. This software is very much around, hey, let's give you a great dashboard. Let's see everything that's going on. Let's see your real-time profit margins, as you can kind of see. But then let's get into, like I said, how do you set up a project? How do you, again, set that foundation so that the software can do more in terms of tracking and helping you out? And so we can add to a project. Obviously, we want to have a project estimate. As we were mentioning, this is really the backbone and the foundation of everything. Now, what's nice is there's several different ways we can add a project estimate. We can use AI. So if you have a third-party estimating tool, which I know a lot of those in the construction industry do, you can just drag and drop that file over. We even, on the demo, someone had done a quick estimate on a napkin and took a picture of it and uploaded it as an image, and then it filled out the project for you and can even help you with the project estimate. But however you go about it, what's important is don't miss this step. To Brad's point earlier, if you don't use this step, then you're going to miss out and you're going to have a hard time tracking everything that comes after this. So always make sure you have a solid project estimate. And then once you have that project estimate, that's what's going to help you to do a lot of reports that we'll show you in a moment. But now, once you have a project estimate, now is when you can start getting into those different change orders. As the debits and credits to the job start flowing in, here's where you can not only track those change orders, but we even have a change order log for you. One of the things that we notice is when you go to conclude a project, there's a lot of questions around, who approved that change order? Is that change order correct? But taking this one step at a time. So we've created a project, we've created an estimate. Now what we want to do is, again, either the client is expanding or shrinking the project, or again, there may be one of those unforeseen expenses that come up, and we need to make a change to keep the financials on track. What's nice is when you start a change order, you see how it anchors here on the right-hand side back to your project estimates. And of course, these are all date and time stamped, and you may be working more than one project for a customer. You may be working on multiple things. And so again, what's nice here is we'll pull up any linked transactions. So you can grab the estimate. 1107 would be the accurate one in this case. And then now that I have selected that estimate, what's nice is it pulls in all the line items. So you can see here, do I need to remove drywall sheets? Do I need to add more drywall sheets? Do I need to make some changes on the electric or whatever the case may be? All of this is then saving back to that estimate, which is then saving back to the financials, which is also then, letting you know how many hours you need to work. Do you need to order any additional materials? Do you need to create more purchase orders? Again, if you're needing more inventory and more expense to that job. So you can kind of see why we say that the estimate is kind of the backbone of all of this. Make the estimate, then you can start in with the change orders, and you can make negative change orders too. In the case of maybe I need to remove 50 drywall sheets because the customer decided to go a little bit smaller on the project. And then lastly, as we mentioned, the audit trail, the change order history, the change log. This shows you all the date, time stamps, what was approved. And what's nice is I'm actually going to back up just one screen. I apologize for that. But there's one thing I wanted to show you here. What's really important, and it kind of ties into the change order screen we were on, but this little sentence here at the top. When your client accepts the change order, the linked estimate that we showed you earlier, 1107, will be updated to match the changes. And so again, this is that two-way communication between you and the client. It's not just about documenting the change, but it's also about sending it out to your client, having them accept it. And then that way, when you get to the end of the job and you go to square off on what they owe you, they've been involved in every single one of these change orders. The finances have been involved, the debits and credits and materials, debits and credits on profitability. That's how we make it fairly simple to handle all of this. Now, to your point earlier, Brad, obviously you'll want to set up some business processes. If your general manager's out there and the client says, hey, we need to change something, obviously he needs to come and inform you so that you can make a change order, or he or she needs to make that change order themselves. But the tools are there, and then encourage the team to use them, show them how to use them, and then we can make tracking all of these changes quite a bit easier. But I'd like to turn it back to you, Brad. What are your thoughts?
Yeah, perfect. And just some of the things that you highlighted, I really just want to kind of like double highlight it, because every company does things a little bit differently, right? And so, but everybody is trying to do it more efficiently, right? Especially if they have any desire whatsoever to scale and continue to grow as a company, more projects, more profit, all those types of things. And when you have those multiple systems, they're disconnected. I'm having to go over here and do one thing and then go update it over here. The more of that type of stuff that you've got, really the harder it is to manage the details. The details get lost. You're relying on people to do things right 100% of the time. And so being able to have a change order get entered into the system, have it get sent out for approval, the customer approves it, and it comes back and updates the system magically, as I like to say. That's fantastic, because the alternative would be, right, you're printing it out, you're re-entering it, you're saving it, and then you're saving it to PDF and downloading it to your computer. Then you're opening up your Outlook and you're hitting the send button, the attach button, and then they reply, and then you're having to go to the other system. And that is just it's just work. It's work and it's work. And the labor component of that is something will ultimately affect your profitability. So the more efficient you can get, not just out in the field, but in the office, in the back office, that can affect things for sure. And by the way, Matt, just there was the few questions that kind of came in that I was watching as you were talking. Is this the online version? Yeah, this is actually the Intuit Enterprise Suite, right? That Matt was showing. That is the cloud Intuit ERP system. Obviously, for those of you that are using QuickBooks Online, it looks very similar, right? Because it's based on the same sort of backbone or same platform. But if you think of Intuit Enterprise Suite, it's more along the lines of, maybe from a function and robustness in terms of feature, it's more of what you might have seen within QuickBooks Desktop Enterprise, but in a cloud environment. And it's also what Intuit is heavily investing in to really compete with some of those larger, a little bit more complicated and expensive type of ERP systems out there. And it's a great next step for folks that are using QuickBooks Online and now needing some of that additional features and capabilities that you're seeing on the screen. So yeah, so that's what so Intuit Enterprise Suite is what Matt was showing. There's a few questions that I think we should probably save more towards the end because they're a little bit more overarching versus the specifics. So let's go to the next topic, and then for those of you that are putting in the questions, keep doing so. And when we get to the end, we'll also touch on some of those that we didn't get to cover. Perfect. All right, let me pull up the next poll because again, this is another really important topic, which is the project profitability. I mean, just big picture. I mean, we're tracking changes, we're tracking the details, but how do we make sure that we're profitable? So what is in your mind as an audience, as you're watching the webinar, what is the biggest threat that you see to project profitability? Is it labor overruns and productivity issues? Is it unapproved and missed change orders? Is it material cost overruns? Is it subcontractor performance issues? Okay. Maybe the crew didn't show up and do what they were supposed to do. You didn't get the A team, you got the B team. Those different types of things can impact it. Delayed visibility into the project financials. And maybe I'm just not sure. It's really hard to say. It's never the one thing. It's a whole bunch of different things. So again, I'll give you a few more seconds to answer that. And then we will show the results.
Yeah, and this is a good one, Brad. This, challenges to project profitability. I don't know one contractor I've talked to who hasn't had a few or many of these. And it really, like I said, when you find that out once the project is done or when the project is 3/4 of the way done, it's water under the bridge. Knowing those things as quick as possible is as technology moves forward, as business processes move forward, that's where it gets pretty exciting. So yeah, I'm curious to see how the poll turns out.
All right, let's see the results. Okay, talk us through this one, Matt.
Yeah, so a little north of 31% said their biggest threat to project profitability is labor overruns and productivity issues. So yeah, we definitely see that. Unapproved or missing change orders. So we kind of covered on that topic. That's almost 19%, 18.6. Material cost overrun, about 13%. Especially with the dynamic fluctuation of materials, that doesn't surprise me at all. Our 7% subcontractor performance issues. Okay. The second largest one, 24, a little north of 24%, delayed visibility into project financials. But a very common theme. And then lastly, about 6%, I'm not always sure where the profit leak starts. That's like that.
Yeah. And so like when we think of so let's pick out the top two, labor overruns and delayed visibility. So labor overruns is a hard one, right? Because this is not just some technical thing that happens out in the world and then it's perfect. You sell something and you ship something and you're done. Right? Construction projects are dynamic things from the very beginning. You've got people on site doing stuff. Problems happen. Yeah, and all the good construction companies out there, the ones that really care and everything else, they're hyper focused on safety, and that's where they need to be focused to make sure that people that are going out and doing the work are taken care of. But accidents happen, right? Unforeseen. I mean, anything I've ever done, it's like the chance of me hurting something is pretty high. I stumble over something I never expected. Right now, now I'm out for 3 weeks. So there's so many ways and reasons why projects can get delayed. Materials not showing up on time, and now you got to reschedule the crews, and now those things happen all the time. Delayed visibility into project financials. This is one we deal with all the time. We're a Intuit, QuickBooks, accounting, bookkeeping, consulting firm, and a lot of times what we're doing is after the fact, right? Bills are getting paid or entered and paid. Credit card charges are getting entered and categorized. And as an accounting professional, a lot of times what we're doing is it's after the fact, right? So how do we know things are on track or off track when most of our job is sort of an after the fact exercise, right? I think what you're seeing in those poll results are obviously true to the reality of people in this space. But let's go ahead and pull up the second topic and just talk a little bit about that.
Yeah, with project financials and phase management, again, it's especially when you start getting into phases. Sometimes I see a lot of people that I talk to want to kind of lump it all together. But the bigger you get, the more projects you're managing at the same time, the more you're trying to not overrun your operating capital. Phases are so important because phases can really help you parse out what you need to do at what phase of the project. Instead of ordering all the materials on one purchase order, if you have 4 phases, you can split things up along with labor. And again, it gives you little mini checkpoints. And so just curious, like as you talk to clients, Brad, what are you kind of seeing around the use or not use of phases, or how customers can go about tracking things a little better as they're especially like starting to grow, scale, manage multiple projects, and running into those cash flow issues?
Yeah, quite honestly, I like to translate the construction experience to just say normal real world. Okay, we're all working on things. Whatever our role is in a business, we're working on things. We've got goals, right? We are working on plans. The only way you can accomplish a big plan is to break it into bite-sized bits, right? It's I need to be able to. I can't focus on the 100 things. I've got to be able to have a subset of things that I focus on this month, this quarter, this year. And the same thing is true in the construction space. If you've got a project, I mean, trust me, we have clients that one project could take 2 years, right? So, I mean, that is something that desperately needs to be broken down into phases. That could be 30 phases depending on the size of the project. But I think most of the ones that we see, they're in that anywhere from 3 to 10 phases throughout the life cycle of a typical project. And the good news is they're also somewhat predictable, right? If you're a custom home builder, you know the deal. It's the same things every time, right? There may be some nuances for a specific home or a specific construction project, but if you're in the business, right, you're doing pretty consistent things over and over and over again. A remodel job is going to have different phases than a custom home build, right? So it because you're in the business, right? So, but I think the key here is being able to see for those phases over time, right? Are they on track? Are they off track? If you're waiting until the end, that's too late to know that things need to get cut, things need to get shortened. You need to reevaluate, the materials that you're buying on a job because it looks like you're on the way to losing money on it. Being able to close out those phases or see what those phases are looking like 1 month at a time, if you will, depending on how long those phases take, is a good way of getting ahead of it. So it's almost like you're closing out the project 1 month at a time versus waiting until the 6-month project is done. So that's what we see a lot. On the screen there, it talks about tracking POs and material orders to phases. And I think the key there is really just making sure that we're not ordering materials before they need to be ordered. Okay. If in a normal construction project, you would wait 6 weeks before you order, the lumber. Okay. Well, what if that first phase, what if the demolition phase and the foundation phase is taking longer than you expected, longer than you had planned? You might need to delay that lumber order for another 1 to 2 weeks because you don't want it just sitting there on the ground, on the job site, getting impacted by weather or anything else. So that's a lot of what I see. So I think this, again, might be a really just good segue to kind of show how this could work in Intuit Enterprise Suite. Like, how do you set up phases? How does that impact, your estimates, your project budgets? Maybe talk a little bit about that, Matt.
Yeah. And excited too, because like I said, there's so much more here you can do with projects. We're going to take a look at setting up not only just project phases as you go to create a new project, but we're also going to look at some of the accounting. We're going to keep anchoring this back to the accounting side of the house. So as you start a project, again, as you've already put that estimate in, as you've tracked any change orders, you're going to start getting some dashboards of what's my income, what's my cost, what's my profit. You'll even see some AI widgets here at work, which we'll talk about later, that's constantly keeping you on track. But as we talk about, breaking things down into phases versus lumping them all together, why is that so important? What kind of does it help you do in terms of the financial software? And what it starts to help you do is understand things like, again, if you want to run some important finance reports like estimates versus actuals, like you can see here, the other thing that is important is, Intuit Enterprise Suite also works with what's called revenue recognition. And what revenue recognition will do for you, just in a very quick nutshell here, is as you're setting up your project as you're adding different phases, what's nice is you may take deposits from a customer. Which you should, again, you can't float everything for every single job. And so when you break things down by phases, one of the important things that this software is going to do for you is it's also going to create the appropriate liability account. So if I'm starting, and I'm just going to use super round numbers here, but if I'm starting a $200,000 job, and let's just say it has 4 phases, and let's just say all the stars align and it's $50,000 a phase. Okay, we know it never works out like that. But what's important is, as I kick off phase 1, maybe I ask for a $50,000 deposit. That $50,000 deposit for phase 1 needs to go to the right liability account. I need to start kicking off all my purchase orders, etc. And then as I am progressing through, and once I say that phase is done or complete, then that releases that $50,000 from that liability account. It now becomes real revenue I need to track, revenue I need to pay taxes on, etc. And so it's juggling the behind the scenes accounting that oftentimes get overlooked and are very, very important. So setting up
Matt too, on that, and just on that topic too, and I think the risk is having things so overly complicated that you get lost in the forest, right? So like even something like that, revenue recognition, so like you want to use it sparingly, right? As when it's essentially needed to be tracked, but not necessarily every single thing, because it can get out of control, I would imagine, pretty fast.
Well, yeah, correct. I mean, you want to set up certain templates and you want to assign it to certain, again, projects, and you can also assign it to phases. But that's where being guided, if you've never worked with projects, if you've never worked with phases, if you've never worked with revenue recognition, if someone's doing that all manually in Excel right now, That's where having a little guidance to set it up is very, very helpful, and will help you get much more out of the product. Now, once you've set up all that, we keep talking about this theme, and in our poll, there were the big group of about 20 plus, almost 30% of customers said, project profitability, lacking real-time visibility is difficult. What's neat about us is, and especially if you're using our payroll and our time, if your employee has a cell phone or your subcontractor or whoever, they can track what they're doing. All that can come back in as labor. It can automatically be attached to the job. And the job can, in real time, as we were showing you earlier, let you know how are you doing estimates versus actuals? How are you doing with your project profitability? Do you have any unbilled time? Another reason why a lot of times your project may look like you're losing money, you may have forgot to build for a good chunk of time. And then just drilling down on that a bit more, here's an example of estimates versus actuals. Being able to see this real time. What did I estimate the cost to be? What are my actual costs? What's the difference? Where am I trending to? And then, just continuing to peel back the layers of the onion, as they say. Unbilled time, being able to grab all that as you're about to finish off a project phase and make sure you've billed for everything correctly. And then, of course, going to some of our reports. And one of the other things that you can do is you can actually not just do estimates versus actuals, but you can actually create a specific budget for a individual project, which is really exciting. And so here, how do you want to set up your budget? You'll see it's a new feature that we've added here recently, project-based budgets. You can grab the project name. Again, it can pull in the financials you've already worked on, the estimates, etc. You can say kind of over what range that project is estimated to be, being worked on. And again, all these are just, we can't cover everything obviously in this one small webinar. Would love to hear what your challenges are and show you some specific things. But the point we're making here is if you need more visibility, if you need real-time information, that's what this software is really designed to help you to do. So yeah, turn it back to you, Brad.
Yeah, perfect. And also just again, scanning some of the questions, I think one of the questions was, it's also related back to the change order topic, and you've talked about project estimates. Okay, so you've got this estimate versus actuals, and that's just kind of like table stake type of report in any accounting system, right? That has estimates. Is what is the estimate? What is the actual? But the question was related to change orders, and do those change orders actually go back and change the original estimate? So that's one question I'll let you respond to, and then there's a follow-up question related to that.
Yeah. So do change orders go back and update the estimate? Yes, they do.
Yeah.
And that's why it's important that we have both positive and negative change orders, because they can both debit and credit the original estimate for sure.
Perfect. And then the other question that I saw there was, when you're looking at an estimate versus actuals, are you also able to see the changed estimate versus changed actual, right? So in other words, having your estimate,
yes,
your changed estimate, your actual, your changed actual, that kind of thing.
Yes. When you have change orders, it will layer in how the change orders have affected the estimate and the overall project, which is great. So we definitely have that slice or that view for you, which is important. And it helps you understand, as change orders come up, am I underquoting them? Do I need to charge more? All those things can help you be more profitable in the future. Perfect.
And I know we're getting close on time, but I can't stop saying one thing that I need to say here. So it's like having a system that ties everything together is so essential, right? Nobody wants to have 5 different applications out there that are doing little bits of it, and then your job is to like cobble this stuff together, right? The more of a cohesive system that you can have, the better. The example you mentioned payroll, you mentioned time tracking. I want to underscore that a little bit, because when we have clients that are heavily job cost type of businesses, having an external payroll system that you then have to job cost after the fact is hard. It's an additional step that takes time, that takes someone micromanaging the details to take this big lump sum and turn it into, details that are job costable to specific clients and projects. Having it in one system obviously is better. You mentioned time tracking, same thing, right? I could be at a job site with geofencing to make sure that I'm not clocking in until I'm at the job site. I'm attaching at the job, right? This is the client, this is the project, I'm clocked in, I'm doing a certain task. Having that stuff be able to flow back into payroll, which flows back into the job cost as a seamless experience, is so much better than having, an ADP payroll, and some other time tracking system, and then some other change order approval process, right? One of the questions was, do you need another software program to handle these change orders and these approvals? No, it's built in, right? It's built into Intuit Enterprise Suite. So you're doing it in one place, you're sending it out, it's coming back in automatically after it's getting approved. And just every step you can eliminate in that process so that it's all in one system, that affects profitability. It's not just making your life easier. It's not just helping you keep your hair that you still have. I joke as I look at my hair. But it actually turns into profit, because that's where labor costs can go up as well. So let's go ahead, Matt. I'll show the last poll here, and we'll talk through this one just a little bit more quickly, because again, I see the clock there. So when do you usually discover a project is in trouble? Okay. Go ahead and take 30 seconds to answer this, and this is a little bit easier to answer. Is it within days? Is it during weekly project reviews? Is it during month-end reporting? Is it when near project completion? Is it after the project is completed? Take just 10, 15 seconds there. When do you normally discover a project is in trouble? And I think, Matt, based on some of the prior polls, I think we can probably predict this to some degree, right? Because one of the biggest complaints was finding out kind of after the fact. But let's see, give another 10 seconds here, and that way we'll get a large statistically significant set of answers to show the people. All right, almost there. Let's go ahead and show it for those of you that are, go ahead and click the button. All right, let's show the results here and see what we got here. And Matt, just real quickly, just for time, I'll just talk through these real quick. So the biggest is during weekly project reviews. So that's when you find out the project is in trouble. That's the most common answer for those of you that are doing weekly project reviews. That's why you do those project reviews, is to keep everything on track and to make sure that problems as they come up are getting addressed now versus, ignored and figured out later. The second most common answer was during the month-end reporting. And why is that? That's because that's when you're doing your reconciliations and finding out that bank drafts and credit card charges haven't been entered. And that's when you find out, you start chasing down the receipts, and it's like, oh yeah, that was the job cost. That was the charge I did out in the field. Sorry, I didn't get the receipt back. You find that stuff up when you do your month-end close and your month-end reporting. So sometimes those extra costs can sneak up kind of at the end. So Matt, just in terms of that, obviously we're trying to help people run projects better, more efficiently, more profitably. Having that real-time project profitability is a need. It's a desperate need of everybody on this call. Talk a little bit more about how that looks in Intuit Enterprise Suite. What are some of the reports people can run? How do people know, especially if they're doing their weekly project check-ins in coordination with maybe the phases that have been set up?
I really like this because in the poll, 0 said it within days. And that's our goal, is to really have this, each day, it's really real time. Within 5 minutes, everything's sinking in. So yeah, that real-time visibility is just so important. And so multiple things that we can do. AI, software tracking. We'll just jump right into the demo for the sake of time. But what you're looking at here is under reports and under goals. You can create goals both for the overall business profitability, but more specifically to what we're talking about, even for specific project profitability. So if you have an important project, if it's a project you've struggled with in the past, with staying on a certain profit margin, or keeping that project profitable, this is an extra step. What's good about this step is once you set this goal, then AI is kind of sweeping in the background, is looking at all the debits and credits to that project, everything going on, and it's telling you, hey, how are you trending? And if you get off, it can even give you suggestions on how to get back on track. Going a little bit further, again, we showed the reports earlier, but we didn't click into all of them. We showed earlier things like estimates versus actuals, but also cost by phases. There's quite a few different reports here. And so, again, just giving you that real-time visibility, what's very, very important. Project profitability summary. So, again, there's certain things you're going to look at when you do those weekly or monthly project reviews. And again, if you're part of the group, almost 30% who are doing monthly project reviews, hopefully this software will get you to where you can do them weekly. And get on top of things faster. But then, of course, if you're a controller or a CFO, looking at the projects once they've closed, understanding the summary of everything that happened and what you can do better going forward. And that actually feeds into our AI so that when you create a new project, it can actually suggest a project profitability based upon similar size and type jobs or services you've provided in the past. And then, lastly, here's just a drill down on that report. So you can see the customer project, you can see the income, the cost, the profit margin. Sometimes what we forget to do, we're moving so fast as a business. Again, the big theme here is talking about while a project's in process, but it's also good from time to time, every 3 to 6 months, go back and start getting even more data from your financials. Understand what customers are giving you the most profit, what products and services are giving you the most profit. Are those things dynamically shifting over time? Do you need to increase costs? There's a whole lot you can do to learn from, the rear view mirror. We want to get you out of the rear view mirror, but sometimes it's good to look in the rear view mirror so that as you're setting goals, looking forward, you know where you've maybe been tripped up and can address those going forward. So let me turn it back to you, Brad, to round us out here.
Okay, perfect. Yeah, and what I'm going to do, I'm going to put up just put up the question slide. If you have questions, there's a bunch of them in the questions panel. So if you have questions, feel free to put them in the questions panel. And if we get to it, great. And if we don't, we will follow up after the webinar as well and make sure that you get your questions answered. Matt and I are both, we collaborate on these things all the time. So we'll be able to make sure they can get you answers, not just in terms of maybe the accounting side of things, but also on what the software can do side, as well as, a little bit about maybe what's coming, because Intuit Enterprise Suite is a very great solution already, but it's getting enhanced every single month. There's product releases coming out to make it better and better and better. So if you do have questions, put them in the questions panel. You can also scan the QR code. Let us know you've got a question for your specific case. Matt, I'm going to touch on a few of the questions that I did see, because there's a few themes that I saw which are interesting. Just to give you a little bit of a heads up, there is some questions specifically about allocating costs, okay, that might not be like hard and fast costs within, on a bill or on a materials order. There's some questions in there about change orders, and do those affect the contract value? Is there a way to see percent complete? Okay, things like that. I'm just letting you know those are there so you can give that some thought. Let me address one of the questions that I saw, and I saw it in a few different ways, and that is, I've got some cost that may not be a hard cost related to a specific project. Maybe it's overhead. Maybe I did a big materials order, 3 months ago, and I didn't know exactly what project it was going to get allocated to, and now I'm trying to after the fact allocate that material or that labor or that other expense, whether it's an insurance cost or what have you. How do I get those allocated? So I'm going to answer that two different ways. One is a good answer, and one is a suggestion based on experience, and the other is a not to do. Okay, so some people, especially folks that are like you've grown up as an accountant, you've been in the accounting world forever. You can talk debits and credits on the fly to people in the elevator, right? Journal entries are how a lot of folks do things that need to get done from an accounting perspective, the manual way of doing accounting. Okay, that always will work. However, I don't recommend it as a general rule, especially when you think of QuickBooks and Intuit Enterprise Suite. Journal entries are sort of like the hard way of doing accounting in a product like Intuit Enterprise Suite. It'll get you there, but there's actually better ways of doing it, because a lot of the reports that are in QuickBooks that are in Intuit Enterprise Suite, they're item-based reports. They need to be attached to those estimates, the projects, the budgets, etc. And so, again, it's kind of a workaround for doing a journal entry, but ultimately it can help you. Where if you take, as an example, a lump sum payroll expense that wasn't job cost, but now you're trying to allocate that to specific job costs. Ultimately, you end up doing what is called a zero-based check, okay, or a zero-based expense. You've got one line item that's negative 30,000, and that's the unallocated portion, and then you add back $30,000 worth of specific line items, and on those specific line items, that's where you can put the customer, the project, the phase, that type of thing. So ultimately, you're allocating after the fact, but not necessarily doing it or having to do it through a journal entry. And so that's a pretty common thing that I see and or recommend to clients. So almost out of time. Matt, any other thoughts on those other topics that I brought up before?
Well, there's a couple that I can talk to. I don't know if you want to throw up that last poll, but yeah, a couple things I wanted to hit is AIA style invoicing is what we currently have. We are working on getting the full AIA certified reports. So again, as Brad mentioned, every 3 months, we have product releases, and we kind of been fast and furious adding features. And then the other thing that came up from Lisa was retainage. That is also something we're addressing. So be looking for, again, our next release will be here in just about a month. And so, you know, I won't do too many spoilers, but we have some good news. We're actively listening to our customers. Anything that this software is missing, we've been working very hard to get in a future release. And then there was a few other things that I noticed around change orders and how it affects estimates, how it affects project profitability, et cetera. What I would really encourage you to do, it's hard for us just to quickly chat and answer that. Set up a demo. You know, we would love to, you know, there's no obligation, but we would love to just understand what are you seeing, how would you like this to work? With a lot of these questions we've gotten, you know, when we understand your workflow, the challenges you're facing, then we can give you a much more accurate, better answer, and actually even show you in product how it works. And then you can kind of see what your day in the life would look like using this product and getting a better outcome working with these new tool sets that are in Intuit Enterprise Suite. So yeah, let me turn it back over to you, Brad, but those were just the few things I wanted to kind of touch off in terms of questions in the Q&A.
Yeah, and you know, and there's so many things that we didn't get to share too. And like one of the, I mean, even more on the AI side, I mean, we're just at the ground floor of what's possible. And every week, new stuff is coming out that's going to make our lives better. Automation is a big one too. Like if I've got a workflow process that I can automate, that's something that Intuit Enterprise Suite does incredibly well. And so we would love to, like Matt said, do a customized demo for you. You know, let's actually talk to you about your specific situation. Let's pull it up and let's compare what you're doing now to how it could work in Intuit Enterprise Suite. Love to be able to do that. And if you're doing work for clients that are in the construction industry, I know you're gonna have questions, right? You're gonna approach them and say, hey, there's a solution out there that might be a good fit for you. they're probably going to come out with a question or two that you didn't have the answer for. So we want to be a resource for you, not just on the demo side, but just, hey, as questions come up, we want to be that company and that resource that you reach out to and say, hey, what about this? What about this? Has it been updated? Has that feature been rolled out? So the poll's on the screen there. If you want to schedule a demo, let us know. If you just want more information, maybe even a few case studies of how this has worked in your specific industry. There's a lot of them that have already been prepared, so we can send those out pretty fast. If you just want to contact us and have a conversation, I'm happy to do that too. So definitely, I'd say a lot of people have already answered that. I'm going to wrap up with one last slide here, because I just want to make sure that you know what you can do or the kind of help you can get. Okay. So VARC Solutions, we are obviously Intuit partners. We work with Intuit all the time, but we don't want to ever, sell somebody a solution and then just go, good luck, because we want to make sure that people are set up for success. So what you can get from us, from VARC Solutions, is not just an objective, hey, here's a good solution, here's several to choose from, let's help you pick the right one. We can actually help set you up. We can do those migrations so that if you're using maybe even QuickBooks Desktop and you wanted to migrate into an Enterprise Suite or QBO, or maybe you're using Sage 300 and you want to migrate over, or NetSuite, we can do those migrations. We can do the training. I mentioned this before. Training is an often underutilized and overlooked component of any sort of systems change. The people are the maker or breaker of the system, so you have to make sure that they're trained. So we can do that kind of training for you as well. Be that support channel for you too. It's hard to get great support around the world, and especially with big companies. We're a company that can give that white glove support when you need it, and really just advising on anything related to payroll, sales tax, time tracking systems, CRM systems, you name it, we've got solutions for it. That's why we're called VARC Solutions. So thanks for your time. Megan, I'll kick it back over to you to wrap up.
All right, everybody, that does it for our time today. So I'm going to close out our webinar. Attendees, you can look for an email that will come from CBO where you'll access the playback of the presentation from this event. And of course, please feel free to visit constructionbusinessowner.com for more on this topic and other additional webinars. Thanks, Brad and Matt and the VARC and Intuit teams. Thank you, everyone, for taking the time to join us today. And I hope you have a great afternoon. See you next time.
Thanks, everybody. We'll see you there.